So as you look at the markets here, obviously we have seen a few names sort of dominate the trade. But where do you think investors should be looking for sort of more potential upside right now?
Good morning, Julie. Well, I'm a growth shop as well as focusing on small caps predominantly. Within that, some of the beaten up sectors that really haven't performed this year, healthcare, energy, are a couple of sectors that we really like. Healthcare in particular has dropped as a percentage of the S&P 500 in the last couple of years from 16% to 9%. So dramatic decline in terms of the percentage of the size of that in the benchmark, as well as really not that great a drop in earnings growth. Earnings growth actually for the last quarter, healthcare and information technology were among the best. So we like healthcare here.
And it's interesting because some would say, well, some of the healthcare drop is justified, right? Even though, as you point out, earnings growth has held up, there are a lot of sort of headline risk. There's a lot of political risk for some of these companies. So are there areas sort of within healthcare that are maybe more resistant to that kind of headline risk?
Sure, Julie. One would be medical diagnostics, medical equipment. While CapEx has dropped somewhat, and there's concerns certainly over Medicaid, overall, earnings growth has been there, and we're stock pickers. So you really have to be discerning, and there's going to be companies that are growing nicely and that are more or less protected, and then those that are certainly more subject to that influence from the FDA, from Medicaid cuts, et cetera.
I'm also curious about small caps broadly here, because there was a time earlier this year where I can't tell you how many strategists I talked to who are pounding the table on small caps.
Yeah.
And obviously that didn't materialize. What needs to happen here? Is it the rate cut that needs to happen that will finally sort of unlock that performance?
Rate cut would be helpful, but the big thing is earnings growth. We went into 2024 with the expectation earnings growth is going to be very 23 for small caps. It didn't materialize. We came into 25. For the first two quarters, particularly around the tariff tantrum, we had a decline in terms of earnings revisions downward. Now you're starting to see that inflect up. So really, we believe in earnings drive stock price, earnings growth drives stock price. And therefore, if you see that inflection for small caps, which we believe will start happening this next quarter, and then certainly into 2026, small cap stock prices will follow.
And then if you're looking at small caps and you're picking stocks, as you say, within that small cap universe, considering the tariffs are still sticking around and there's still some volatility even in the level of tariffs, right? We don't know what's going to happen with China, for example. Yeah. Do you then try to pick the small caps that aren't in businesses that are as affected by tariffs?
That is certainly a direction to take. We've done extremely well in terms of some of the AI infrastructure. A lot of these companies, whether it's in the power, whether it's in the connectivity, whether it's in the cooling, tend to be small and mid cap names. So certain big guys are driven by the hyperscaler CapEx, but a byproduct of that is spending on, as I mentioned, power, infrastructure, connectivity, cooling, et cetera. And those tend to be some of the smaller cap names. We think that continues. Certainly valuations have grown and gotten somewhat rich, but the earnings growth has been somewhat spectacular.
So in other words, we have seen some of the similar move that we've seen in the large caps in that arena has also been happening with the small caps in that arena. I guess I would ask, if you've held them, great. Is it too late to add on to some of those names, or do you think a lot of the move has already been seen?
Some of the move's been seen. Backing up, we've had a heck of an earnings season. S&P reporting, 90% of companies reported 11.8% earnings growth. That's 700 basis points above what the expectations were just 2 months ago. So it wouldn't surprise me to see a little pullback as we exit earnings season. That would be a great time to be adding to these names.
Gotcha. And then I think you mentioned energy as well. And it's been a tough slog for those energy names. On the large cap side, energy stocks have really been underperforming. You pointed out the underperformance we've seen. And part of that is down to what's been going on with oil prices, which are just have not recovered enough to boost the profitability of these companies. So what happens then in the second half of the year, and how does it affect these companies?
Really going through the second half of the year and into 2026, would not be surprising to see the U.S. oil growth stagnate and actually roll over. I'll say that again, U.S. oil growth rolling over, which would be a huge boon for these names, because then you'd see CapEx start increasing, you'd see rig count and frac counts start increasing, and that would be a big, big plus for both on the service side as well as for price. Natural gas prices have been reasonably strong, and natural gas names have done pretty well because of the data center boom. But at the same time, if oil does roll over, some of these names really have a lot of upside because valuations are very, very cheap.
Unless I want to ask about defense tech, because that's an area that has gotten so much attention this year in the US, internationally, et cetera. There's been a lot of increased outlook for spending on this area. Are the small cap players, when you look at them, as able to play, right, as able to compete against some of the larger companies that have been getting into the space?
I would say they are more able to compete. They're more nimble. Their technology is better. They're not subject to this bureaucratic gigantism that the larger names have been subject to. So some of the smaller names, particularly on the drone side, on the rocket side, motor side, have done extremely well, and we think they can continue to do well. So defense tech on the small cap side, I'd much rather be there than large cap legacy players.
David Volpe, thank you so much for joining us. Appreciate it.
Thanks, Julie.